And that sound each and every day is the start of our halftime report. Welcome out. It is 12/6, 2018, day after the market was closed. We're coming back. Markets initially selling here. They are in the red across the board, but recovering here at midday. And we're going to break all that information down and kind of work through the technicals and whatnot. First off, welcome, Matt. Welcome, team. Matt, how you doing this morning?
Doing real good, Tim. Excited to be here with the crew.
I am as well. Theta Thursday. I love Theta strategies. I love Delta strategies. I think you got to have a dynamic portfolio. But today, what we're going to do is work on a cash flow strategy, which is very popular, very important. We talk about it all the time. We talked about it yesterday as well. And we're going to build a couple of covered call trades off our Tackle 25 list. And looking forward to that for our feature. But let's start with the S&P 500, Matt. We were talking about this just a few minutes ago. It was selling. It found support. Now it's coming back up. What's your read technically?
It's the same thing we've been talking about, and I loved what you said in the pre-production show. You said, I don't believe in all the headlines, Cody, but I do believe in support and resistance. And you're seeing today technicals in charge, right? I know there's headlines out there. I get that. Somebody was arrested on a violation of the Iran economic sanctions out of China. They're in Canada. I get that headline. That's just a headline. This market would have sold yesterday, Tim, without that headline. Would you agree?
I agree. In fact, you did see some selling last night on the futures market when it opened back up. Yeah.
Well, that's exactly what you saw when the market opened up before those headlines came out, Tim. So here's the Sunday cash open, right? Here's the Wednesday kind of, no market activity. Tim, here's the opening price of the futures market. What do we see? Initially down. That's before the headline came out. Okay. So I know we always like to give a headline or we always like to give the market a reason why it's doing something. Well, here's the reason. You had negative movements coming in on Tuesday night to the market when the market closed. You had negative economic factors coming into this. Nobody is believing that Trump and China actually has a deal on the table and actually are going to overcome some of the biggest challenges that we've talked about, such as intellectual property protection rights. So you're seeing a lot of just overall concern happen with lack of deals. And Tim, I've talked about it on Tuesday. I talked about it on Monday. I talked about it on Wednesday, and I'll talk about it here as well. There's when these political leaders announce a deal, but there's no substance to that deal, the market's not going to like that uncertainty. The number one thing the market doesn't like is uncertainty. They can price in everything else. And we saw that exact same thing happen today. And it wasn't, and I'm not even talking about the futures market or the equities market, Tim. We saw that exact same thing happen with OPEC today, where all week long, what do we hear? We have consensus on cuts, right? But where were the questions? Obviously, there's a consensus on cuts. Where's the questions? Who's cutting? How much are they cutting? And can they agree on that? And we saw that today where Saudi Arabia came out and said, well, we're not going to do 1.5 million barrels cut. We're not going to do 1.3 barrel. Well, why don't we do $1 million barrel cut? Well, that's below what the market wants. That's below what the entire oil market and the traders and the oil producing countries, what they want to see. And so when you have these types of deals and you hear, oh, we have a beautiful trade deal, no, best trade deal ever. And it's like, okay, what's the parameters of the trade deal? What's the numbers behind the trade deal? Oh, we have this amazing consensus on cutting oil. Okay, who's cutting? How much oil are you cutting? And I understand that those negotiations have to be, they take time and they have to be thorough and so on and so forth. But why announce anything until there's actually some substance of a deal? And that's what's driving the market a little crazy. And that's what's causing a little bit of the whipsaws. Okay, is the Fed dovish or hawkish now? Or do we have a trade with Trump? Do we not have a trade with Trump and China? Are we going to get the new UMCSO deal done through Congress, or is Congress going to have, major, hiccups over the old NAFTA versus the new post-NAFTA 2.0 deal? So we have a long way to go to get through all of this. And until we get some clarity on that trade, until we get some clarity on oil, until we get some clarity from Trump and the Chinese delegation, you got to focus on the ultimate levels of support and resistance. And especially on the daily chart, when you're looking at those ultimate levels, we've talked about those being 2,600 to 2,625, resistance at 2,800 to 2,820. Focus on those levels. And what do we see happen today, Tim? You saw an initial breakdown of the futures market of 2,700 overnight on last night. That was a clear entry on a day trade to the downside. And then where's the target? Well, where's the target? 26.25. And what did the market do today? It came right into 26. What was the low? 26.21. It hit right into that support level, and you started to see intraday buying. And so until these levels are broken, I'm going to be a buyer at 26.20, Tim. That's what I'm going to be. And I'm going to be a seller at 2,800 to 2,820 until those levels are broken. And until those are, I'm just going to trade what I see.
Well, market posture and market bias, Matt, we tend to think of it in a bell-shaped curve distribution. And I agree that you will be opt to go in and find opportunities on the bull side when you're at support, and especially when you get confirmation. But I'm not moving my delta too much away from zero right now. You know, when it's at resistance, I go negative delta. When it's at support, I will hedge that back up.
Yep.
I'm still carrying a negative delta here. It doesn't mean that I'm not, but I will be looking for opportunities to buy today as well. You know, like
I'm also looking for opportunities to close short positions too.
That's right. Profit taking. There's all kinds of things that you got to do within your trading account. One of the most important things, and I learned this years ago with a lot of people, is they have a hard time trading what their bias is. I've had conversations with traders over the years, Matt, where they say, yeah, I know it's bearish, Tim, but then we go on their account, look at it, Matt, and they have 2% beta weighted positive delta against the SPY.
No.
And I'm like, what do you mean you know it's bearish? Then what are you doing, right? You are trading you're trading bullish, but you're telling me it's bearish, right?
Yeah, and how many times have we seen that in our life?
A lot.
Over and over and over and over again. And it's when we get somebody that comes to us and they're like, "Hey, listen, yeah, man, I'm bearish right now." And I'm like, "Oh, let's look at that portfolio." And it's like, oh, wow, you have a beta-weighted portfolio delta that puts you smack dab into the strongly bullish category, but yet you're bearish. So where's the disconnect in that, Tim? The disconnect is and it's a psychological disconnect as much as it is anything else. It's having the ability to go out there and close some of those bullish trades, right? Close some of those bullish trades. Look for new bearish trades, running your trading business. The disconnect is when somebody takes a step away and they're like, yeah, I'm bearish, but I haven't done anything. Well, the question is, why haven't you done anything? Well, you know, how many times do we say, well, you know, I got a little busy, right? I got a little busy. Work, got a lot on my plate with work. You know, kids, wife, friends, family, community, whatever the noise is. Well, the simple reality, Tim, that exists for everybody in society. Everybody is stressed from a time perspective. Would you agree? You got to make it a priority.
Very busy. Yeah.
You got to make it a priority. If you're going to be successful at this, and if you're going to be able to make money in this environment, you have to make it a priority, right? And then, and I agree with Audie. Those are just excuses, right? Go out there and run your business. And if you're not filling out your portfolio delta on a daily basis, and if that is not matching your overall bias to the market on a daily basis, you're not doing your job as a trader.
I agree with that. In fact, there are 3 journals on the Tackle Trading website for pro members that I think are all important. In my opinion, the one that is most underutilized is the Tackle Portfolio Journal. And it's just something that people just haven't been trained on, or maybe they're just not using. I don't know. But they need to start using all of it.
Let me ask you guys something. Would it help if me and Tim went through that portfolio journal to walk you guys through how to utilize it, including beta weighting your delta? Would that help?
I'm guessing the answer is yes, by the way.
I think
I'm expecting some yeses coming in. And while we indeed wait for the yeses, I'm going to say hello to my old friend Adi. Adi, it's good to have you here. I saw a question from Adi earlier, Matt. How do I get alerted when the halftime report goes live? Because I was waiting for it to go live. And I think he figured it out. But if you're out there and you haven't figured it out yet, there's a subscribe and a bell button down here in the channel. Make sure that you have the bell alerted on.
So Tim, there's no poll for Friday Fun Day.
We'll just do the portfolio journal.
Friday fun day is beta weighting portfolio. Okay, beta weighting, delta weighting portfolio, and filling out that portfolio journal on a daily basis. Let's do let's do, 20-25 minutes on market analysis tomorrow. Let's spend a good 30 minutes on that portfolio journal, because I think it's really, really important, no doubt about it.
Yeah, I love it. I think that would be a really, really good way to spend our time. I'm looking at the heat map on the stock market, Matt. We are getting some mixed action here across the board in tech, especially. There's a couple of companies going back up: Google, Amazon, Netflix, and Booking.com, IBM. If you're seeing any kind of recovery, it is in tech right now. And on the NQ, you're seeing that candlestick. It didn't sell down to support yet, and this rally is not getting it out of the woods, Matt. I actually still think a bearish opportunity potentially here if it starts selling again. What's your read?
Well, let's see how it responds intraday. Obviously you didn't come all the way into the ultimate level of support, but Tim, you got to focus that on the S&P 500. That S&P 500 is the major market barometer. So a lot of the buying activity came in off when the S&P 500 got into that support level, and also on the Dow Jones got into its support levels as well, right here at about 24,200, Tim. So on the Dow and on the S&P, you came smack dab into those ultimate support levels. The NASDAQ didn't do that. It kind of set it above that level. And the Russell 2000, obviously being one of the weaker of the bunch, came down a little bit even more than that. But the intraday buying, Tim, has been very impressive so far. And I was looking at this earlier today on the 15-minute chart. You're coming down. This is the futures market open from yesterday, obviously down, 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 down. But look at the double bottom right there, look at the double top right there, and then look at the breakout right here. That breakout is significant on an intraday perspective. And Tim, in the pre-production show, when it did break out of that, I said, okay, watch this go to 6,800, and let's see how it performs at 6,800. And amazingly, we could finish it on a very, very long-tailed shadow doji today. But I do expect this thing to pop back into 6,800, and then I'll assess that coming into the close. But from an intraday perspective, Tim, breaking out of these short-term sideways channels after this type of price movement, yeah, I do expect price to appreciate back up into 6,800 on the NASDAQ, and then we'll see if it retraces off that.
So many of these companies have been on my watch list, and I watch them every day recently because of the volatility. Let's take a look at Activision and Take-Two, two of the top performers on the NASDAQ. You're getting a little bit of a bear retracement in some of these. ATVI, let's look at Activision first. See, this is the kind of deceptiveness of a bear market when you are down in tech the way that we've been down the last few months. One of the top gainers is up 3.5%. That's an ugly chart, Matt. Not even close. TTWO.
A retracement into 50 on Activision would be a shorting opportunity.
It's tradable. Yeah, bearish tradable. I think these bear retracement setups are going to be interesting.
Put that a little bit of slowing momentum on Activision on the gap down off of the trend. Off the earnings. But I still think a retracement slow down into 50 could be a shorting opportunity there.
Yeah.
Take-Two.
Red Dead Redemption. Well, green candle here, double bottom. Maybe a momentum change.
Could be a momentum change. $100 significant whole number.
You're still below all. If it breaks, and that's significant on both sides. It might hold, but if it doesn't, that's also tradable to the downside as well.
Keep an eye on it. But if you're shorting this from 110 to 100, 100's got to be your target.
Yeah, I would agree with that. A couple of the bigger losers.
Did you lock in profit?
Yes, I did. Yeah.
Yesterday? Was it yesterday?
No, well, first of all, I turn them into spreads and then I convert that, and I do a lot of different adjustments and whatnot.
So you converted to a bear. I'm assuming you converted to a bear put spread.
Had the long put, turn it into a bear put, turn it into a vertical. It kind of naturally hedges you and takes in profit, allows you to catch the trend. So that's, EA was on the report this week in the same kind of vein. EA, if you would. And bearish, coming back a little bit here on a green candle, downtrend, but still very bearish.
We talked about this one in the coaches show the other day, and basically the question was, has it already moved too much? And I said, yes, on this one, it had moved too much to put into a new entry because you're at your first target. A close under 80, though, is another shorting opportunity. I know it's having a good day today. buying off support, but still keep an eye on this. The close under 80 is still a shortable opportunity.
Before we go too far into the Dow and all the large cap stocks, we're staying with tech and also the international conversation here for a minute. Give me FXI if you would, Matt. One of the major headlines today was that Yahweh news. And when a billionaire, and is she a billionaire, Cody? I think so.
I don't know if she's CEO or CFO of some.
She's the CFO of the largest, one of the largest companies in China. I would say she's a billionaire.
Whatever it is, she's a wealthy person, global leader from business perspective, arrested in Canada.
The daughter of the CEO of that company.
Correct.
Daughter of the founder.
Yeah.
So I saw the news headline, and I understand that anytime somebody of that stature gets arrested, that's going to throw a wrench into it, Matt. But how in the world could that affect the China-U.S. trade relations? I mean, maybe I'm not seeing it. I thought it was a little bit of fake news. Use the phrase from our dear president here. Didn't make sense to me that it had that big of an impact, but that's what the headlines were attributing to the risk overnight.
No, that's not it. It's not. Don't believe that nonsense. That is a headline that people who aren't traders need to give to people who write things for traders. Does that make sense?
Yeah.
Just a headline. But no, I don't think that's going to throw a wrench into those trade talks. I think Wall Street, and I believe a lot of traders and a lot of economists and a lot of people who understand these types of geopolitical situations understood coming out of the G20, especially on Monday and Tuesday when we started seeing a little bit more that was coming out of the G20, that there was that they had a great dinner date. But there is not a lot of substance to those trade discussions, and they never talked about the most important situations. The most important things that are impacting those trade negotiations, and that is intellectual property protection for American companies. And so they haven't even started discussing some of the more controversial, more difficult negotiation points. So I don't know. I'm with the market. I don't believe that there's going to be a deal in the next 90 days, and the market's just showing you its teeth. And so here's the thing, and I'll just put it bluntly, Tim. I said last week I thought the market was overreacting to Chairman Powell's speech. Remember when I said that last week, and I said it this week? I'll say it next week and the week after. I think they were overreacting to that. That's number one. Number two, there was a little bit of overreaction, obviously, to the G20, and I overreacted to the G20. I thought we would see a little bit more sustained buying opportunity coming out of the G20. We certainly didn't. I felt caution was the word of the day coming out of the G20, but only a half a day bump coming out of the euphoria of the G20. I thought was a little misguided in that capacity. But the simple reality is now most traders, most funds, most institutions are coming around to the simple reality that politicians, especially in the last few months, are doing absolutely nothing besides talking. And these trade deals, these tariff man's going to own this, Tim. He's going to own what is happening. He's going to own creating this volatility, and we'll see how the populace kind of reacts to that. But until we start getting a little bit more understanding and further down the road from a trade perspective, this volatility is going to be here to stay.
Now, I want to rapid fire through about 5 different symbols, and then I want to get your reaction to something after we just look at the symbols. You give me the visual representation or interpretation of what you see, and then we'll have a conversation. ATHM first, okay?
Wait.
Quick read, rapid fire.
Reversal pattern here in 200-day moving average. Wait for a retracement or to break of the $90 mark.
BABA, BABA.
I'm getting excited to buy BABA.
BILI.
That's tradable right now.
Uptrend off of a correction earlier in the year, right? EDU.
Yep. Potential reversal, only tradable with a breakout of 60, I'll call it 65.
But pivot relationship showing you a change, correct?
It's definitely pivoting around. It's definitely showing reversal patterns. It's in its reversal pattern right now. But anytime you have a company in a reversal pattern, you got to wait for it to break out of the reversal. So, a breakout of 65 is tradable, no doubt.
HTHT.
Breakout reversal, pivot back down to 30 with confirmation, that's viable.
WB.
Breakout of 70s on Weibo is viable.
And even our last, but definitely has been least this year, VIPS.
Don't need to look at the chart. It's got to close above 6.
What do all those companies have in common besides the reversal pattern? They're all Chinese companies that trade over 1 million shares a day in the US. One thing, guys, that I'm getting interested in with all of the conversation, the nature of the market, and what's been going on is potentially looking at long investments on Chinese stocks when they do break and give me triggers. Now, almost every one of those companies to a T is not tradable today. They need something to happen. But I do like the pivot relationships coming off the bottom, Matt. The news obviously today was about that woman, and I'm trying to remember her name. In fact, I'm going to look at the prep, make sure I get it.
I'm not
Meng
even going to
Wanzhou, the CFO of Huawei. But I still see FXI and the Chinese market as potentially bullish if we can catch a run and a break.
Yeah, there's a lot of reversals happening here. Obviously, with the headlines coming out, the market reaction to the G20, it's thrown a monkey wrench in everything here, right? But with confirmation, a lot of these things are tradable. You're seeing reversals across the board in the Chinese tech and Chinese companies. So keep an eye on them. There's going to be opportunity, but I don't know if that opportunity is today.
I don't think so, but I've got watch lists developing on a lot of those. Baba is my number one on that list, by the way. Biggest company over there, and a company that does have sound fundamentals. Been on my long watch list for a long time.
I'm telling you, that gap down to 150, kiss off 150. 150 is an important number for Baba. You got the rising 20-day moving average. It's kissing off today. You got a 50-day moving average that is absolutely slowing down as well. You do have a higher pivot high on Baba, and if it does confirm at 150, you will have a higher pivot low on Baba. It's not a clean chart, but you're not going to find a lot of clean charts in the market right now.
No, you are not. Well, and there are some clean charts. Crude oil is a clean chart to the downside. We'll get to that one here in just a minute. That one's about as clean as they come on that downside. Move on to the Dow Jones, if you would. Let's look at the large cap area in the markets. We've talked S&P, we talked NASDAQ, look through some of these Chinese stocks as well. I'm looking at the Dow, Matt. There are 4 companies going up today. So I know we're making a little bit of an intraday recovery coming off of a support, but it's not a bullish day in the market. Let's not overthink that.
No, it's recovery off support levels.
Yeah. Largest gainers on the Dow. This will tell you. Actually, now there are 5 companies that are in the green. Intel, Walt Disney.
End of the day.
Yeah, there may be. Walt Disney, Intel, IBM, Cisco, and Visa all up about 0.5%. But then you got Boeing, JP Morgan, DuPont, and Chevron down 2.5% or more. I'm still seeing relative weakness on the Dow here.
Everything is relatively weak so far.
Yeah. But the NASDAQ's almost green. In fact, as we're speaking here, the NASDAQ 100 is almost going into the green. It's really
11 points.
Yeah, almost there. Let's move on to the Russell.
You start going green today, watch out on the NASDAQ.
Obviously, yeah.
You clear 7,000 on the NASDAQ. Let me look at this real quick, T. Okay, look at that little pivot here. Look at the strength coming into it. Let's just look at that. You clear above that. Like I said, these numbers are very important, but you get to 6,800. You got another 25 points to the upside before you hit the next resistance intraday.
Yeah. Yeah. Yeah, tech is making a comeback, but obviously we're here sitting at lunchtime, halftime report, and we're battling into some resistance zones midday on a day where the market gap down now showing strength. I agree with it. That might be a day trading tradable entry, but it wouldn't make me want to go aggressively bullish on the market or anything.
No, the best trigger was above this intraday right here, Tim, at 67.30. We'll just call it 67.30. That was the best intraday trigger that the markets had in the last few days as a trader going back to Monday. You close above this. I don't know if you got the reward to risk ratio. I would love to see a pullback back down here. If I'm looking at day trading, I'd love to see a pullback here.
Yep. Let's look at the RTY. Then we're going to move on to currency and commodities. Small caps, they took it on the chin on Tuesday, Matt. We talked about that weakness. Just an incredible sell-off, incredible weakness. You got a little bit of a V-shaped pattern. If you were looking for an intraday entry, Matt, you do have some resistance right there that if you break and run, you've got a little bit more room here. If the market's
but would you rather buy the NASDAQ on the strength that it has today or the Russell simply because it's being pulled up by the rising tide?
Probably the NASDAQ,
If you're going
obviously.
to day trade that Russell breakout, you would much rather day trade the breakout on the NASDAQ.
Mm-hmm. RTY here on a daily chart, 1450 is developing some support, but it tried to break below that. It's the importance of the difference between a close and a test, Matt. Testing the breakout down here, it did not close below that. Yep. And what are we at right now? 1464. Obviously weak, obviously bearish. We've had this one ranked on the low end of the indexes for a long time. Nothing's changing for me on that. I don't know where the next level is, Matt. Back that out to a weekly real quick. I know a lot of neutral condor traders, they're always watching for hedging levels and whatnot. Probably 1350?
1400 will play it just because it's a little bit of a whole number. If I look out to a little bit more time frame here, T, just give me 1 second. Let's go out to 10 years time frame.
Mm-hmm.
So just to kind of give the little bit better picture here. So this is looking just at for some reason, RTY. Oh yeah, they switched RTY, so you're gonna have to look at the right here. But if you're looking at the right here, Tim, and you're looking for potential support zones, you got a very, very good one right there at 1400. You got another one right here at about 1340. And then you have a very important one at 1300. So if you're selling condors, and Tim, I wouldn't mind selling a bull put spread here. You're at support, showing intraday strength here at support. If you're looking at that, you can sell under major support levels. I'll bet you can get all the way down to 1200.
I've been trading condors for so long. I have more advanced techniques than probably the beginner who's just learning the system, Matt. But I actually, even on Tuesday, I had an order in for a partial position, kind of legging into the bull put for February, even though it's early for that contract date.
Yeah.
I don't mind doing that. Whenever I'm in a certain window, because even at 75 days, I know that a lot of traders are going to wait till 65 days based on the rules if they've learned that system. But I was willing to do it because I saw a technical level. And now here today, I'm going to add probably a half of a position size as well for February. But I'm looking to get a good fill on that stuff.
A lot of traders are going to wait for another 10 days or so before they start entering into that February contract. But I mean, you're sitting at a support level. You can go sell the 1200 70-day contract. It's a 7 delta. 10-point spread. You're not going to get the cash flow that you typically would want to see there. But you're still getting 55 cents. You're still getting 5.5% on it.
Well, and because of the nature of the bid-ask spread, when you're dealing with prices of this nature,
they're wider today than they normally are.
And so I'll ask for more money. And so a real simple thing that I think would appeal to anybody's logic, if the market tells me that the midpoint credit's 50, I'll probably ask for 60 or 70. And if I get it, great. If I don't, forget it. Who cares? I don't mind waiting another day or whatnot. It's learning how to get fills in credit spreads. I think those little nuances can make a difference at the end of the month. There's no doubt about it. Moving on to the dollar, flat in a range here, still an ascending triangle, Matt. Till we break, there's no real trade. There will be trade on currency cross pairs, but on the overall index, we're just in an upward trend. Compression, is that what you see as well?
I don't have it as an upward trend anymore, Jim. The dollar's going into consolidation.
Mm-hmm.
It's going back into a currency pickers market that we were dealing with in the summer of earlier this year. So I got it going into a little bit of neutrality with a slightly bullish rating. I believe we were at 40 last week on the scoreboard. I'd be a little surprised if we're not still at 40 tomorrow.
Could be. I mean, I'm still going to be bullish when we're above moving averages, and I expect the Fed to raise interest rates, especially off of everything that we've seen over the conversation, Matt. They're going to raise rates. Even with Powell's testimony and all that, you said it earlier. You didn't believe it all the way at the time. I still think the dollar has bullishness in it. Now, 40 is about perfect for me. Because it's not aggressively bullish, not tradable until we get a break and a run. Is that a pivot change? Would you call that a change in momentum with the pivot high at 97.6 down to 97.5? Is that enough to call that a lower pivot?
Debatable.
Yeah.
I mean, I'd like to give you a concise understanding, but it's debatable. I got it as a symmetrical triangle. I got it as a bullish symmetrical triangle right now, which is always in the neutral to slightly bullish range for me.
Mm-hmm.
Matt, I literally drew that same wedge this morning.
Yeah,
when I was doing my analysis, I drew that exact same wedge, and then I also drew a line through 97.
I wonder who your mentor was.
I wonder.
Yeah,
I mean,
I wonder who that was. Must have been Tim. But no, it's I got it as a symmetrical triangle right now, which and again, I want to be very clear on this. Anytime you have a symmetrical triangle, a high base type situation, a cup and handle situation, an ascending triangle situation, those are all slightly bullish type continuation patterns, Tim, but you got to be neutral until it breaks. And so you're and that's where that 40-yard mark is, Tim, on the scoreboard. Whenever you see a 40-yard mark, it's typically because it's in some type of continuation pattern or overextended pattern based on that. So yeah, I'm looking at a continuation pattern called the symmetrical triangle. If you look at it, if you break it down to the major currencies here, and there's some cross pair currencies, cross pair opportunities, and I'll definitely look at that in the Forex report this week. But the Australian dollar coming back down into the breakout channel. The euro just flat out neutral right now. The British pound trying to hold 127. I'm not going to touch the pound on a buy or a sell until I see that line crossed and closed under. Okay, that line will stay on my Thinkorswim chart until that line is crossed. And until that line is crossed, I'm just hanging out. So, but I'm still looking at that 127 as a close underneath on the pound. Tim, the trade I'm looking at, and probably do a deep dive in the currency report, is perhaps a New Zealand dollar trade. And this is a currency I've been touting for the last month and a half, 2 months. I still like it today. Got a little overextended on the gap coming out of the Sunday open after the G20. And then as you see it start to come back down into that breakout channel right there at that 200-day moving average, obviously it's coming down. You don't touch it until it slows down and confirms. But that's the one currency I'm looking at. Outside of that is the Canadian dollar. And the Canadian dollar, Tim, is, you take that EIA number, for example, okay? What's the most important tradable instrument the EIA number will impact?
Oil, obviously.
Oil first, right?
Crude oil, yeah.
What's the second?
Well, probably gasoline.
It's the loonie. It's the Canadian loonie. It's the Canadian dollar. Because Canada is so closely tied to oil, commodities, gold, silver, copper, they're very sensitive to reports that impact the energy market as a whole. And when you saw what happened today on oil, obviously the dollar is going to appreciate against the CAD. So if you're looking at, say, okay, oil underneath 50, man, FXC, right? FXC, the Canadian dollar, that could be a play there as well. So the Canadian dollar is breaking out of major levels of, the US dollar against the Canadian dollar breaking out of major levels of resistance. If oil breaks 50, Tim, the CAD should depreciate against the dollar quite aggressively. So keep an eye on that. So there are some opportunities in the currency market, no doubt about that. But a lot of these major currencies, like against the yen, against the euro, against the pound, against the Swiss franc, those need a little bit more time to set up. But New Zealand dollar trying to set up right now.
Two major events here in the next 24 hours that can impact currency. You got Fed testimony tonight from Jerome Powell. And where's he speaking tonight?
Well, his speech on Wednesday was Congress, so I don't know where his speech is tonight.
I mean, how many testimony does this guy give every week? Unbelievable.
Well, they had, up until Powell's testimony on Wednesday was canceled to celebrate George H.W. Bush's life. I believe, what was there, Cody? 12, 13 Fed speeches this week?
Yeah, I think there was about 13 or so. It was a lot of, we're going to tell you this is what you told you type stuff.
Yeah. I actually got it right here. He's due to speak about the economy in rural America to the Housing Assistance Council annual event in Washington, D.C., which, by the way, is the same thing as a Catalina wine mixer, John.
I was going to say, John, it's much. I would rather see him speak at the Catalina wine mixer, and I can't wait to see Step Brothers 2 called, what is it? What is that new one they're doing? What's it called? Watson and I don't know. I can't wait. I love those two together. They're so funny. But yes, the Catalina wine mixer, John, that's a gold star today, buddy.
We're a late 80s Billy Joel cover band. We do not do piano band. All right. That's one of the funniest things I ever seen in my life.
It really is one of the funniest movies of all time. Holmes and
Unbelievable.
Watson. Yeah, I'm excited to watch that.
And tomorrow, the unemployment rate, Matt, actually, we're expecting 3.7%. We've had full employment. We know the employment measurements are off because of the way that they count it and all that kind of stuff. But
Listen,
the
we know
jobs
what's going to
report,
happen.
yeah.
We know the reports. The only thing you really need to track in that jobs report is hourly average earnings, wages.
Yeah.
That's the one thing we need to see. If inflation is what inflation is going to be, but we need to see hourly earnings. So I don't know if there's anything that can happen in the unemployment report that's going to impact the next week when Jerome Powell gives his interest rate decision, and I believe that's in 2 weeks, right? Yeah.
Yeah.
So I don't know if there's anything that's going to happen tomorrow or the next week with inflationary reports. I think their decision is already made. I think they're going to increase the interest rate by a quarter of a point, and I think that could be severely negative to the market, Tim. I think the market is still wanting to believe what Jerome Powell said last week, and if he ends up raising rates, one of the biggest concerns is slowing growth and the cost of borrowing against that slowing growth over the next year. You increase another quarter of a point, you increase another 3 times next year, Tim. Everything we've been saying over the last 2 years with interest rates is coming to fruition.
Yeah. Yeah. And we know, doing our research for the bear market survival guide and that course and all of the discussions we've had and deep dives we've had about bear markets, Matt, interest rates are not good for economies. And we all know that. If they go up for a long period of time, eventually that's going to trigger this thing into a further bear market.
Well,
Right
and
now,
I get it. Everybody in the market, well, not everybody, everybody in the market wants to say, okay, well, why don't you just keep interest rates low forever then? Right? Just keep interest rates low. Just keep the market going up. Keep the stock market going up. The stock market isn't the economy. Okay.
correct.
Okay.
Yeah.
Moving on. A crash in the stock market. And I was talking to one of my students yesterday, and I'll just tell you what I told her. I said, you know what? Crash the market in the next year. Crash it. Crash it. Let's go make a lot of money on the short side. That's fine. Don't care about that. But that's not the opportunity I'm most excited about, Tim. The opportunity I'm most excited about is let's go down the rabbit hole a little bit. Let's say the market does in fact crash. Let's say the Fed normalizes interest rates, debt bubble burst, and prices go down, and everybody's screaming bloody murder and running to the hills, and the end of the world is happening, and craziness, and all of that is happening, right? But what about us? What about this community in a year from now, when we're seeing PE ratios at 15 across the board instead of 28, 29?
Yeah. You have to. Yeah.
Bye.
Yeah, when we're seeing double bottoms across the board in great companies that everybody has been like, oh, I wish I would have bought Amazon at 1,000. Well, now you have the opportunity. I wish I would have bought Apple at $100 when they 7-to-1 reverse split. Well, here's your opportunity. I wish I would have bought, Intel at $20 a share. Well, here's your opportunity. Those are massive, massive opportunities, Tim. And yes, I am excited to trade this bear market. I'm not going to lie. I'm very excited about that. As a day trader, as a swing trader, as a trader with that skill set, to be able to shorten or lengthen time frames and switch strategies and delta weight and beta weight and make sure you're protected. I'm excited about that. Okay. And our community should be excited about that, because we're going to be with you and we're going to navigate as we go through this together. But I'm most excited in a year from now, or a year and a half from now, or 2 years from now, whenever that is, because we don't know. I'm most happy at that next bottom when, Tim, you and I are analyzing. We're like, hey, is that a double bottom on Apple? Is that a double bottom on Amazon at $1,000 a share? Ooh. Is that an Amazon PE ratio at 25? Oh my God, Amazon hasn't had a PE ratio at 25 for 10 years. I'm excited about that, and so should everybody else.
I got to get back into my meditation daily routine. I had stopped doing that for a while. I'm going to start doing it right now, because through meditation, I learned being excited about something 2 years from now is fine, but you should also be focused on the moment. Thing you should be excited about is if crude breaks below 50. Okay. That's all I'm going to say.
I'm going to disagree with your meditation. And here's why I disagree with that. Tim, you've said it your entire life. People overestimate what they can do in the short term, and they don't plan for the future. They don't plan for the long term.
Yeah.
Should you be excited for a short on oil at 50? Yeah, get excited about that. But also be conservative and very passive in this marketplace, and don't get too over leveraged and get your ass handed to you in a ridiculously volatile condition that is news driven and crazy. versus, and don't get whipsawed out in the entire market so you miss out on that long-term opportunity. So I get the excitement in the short term, but don't lose perspective.
There's no doubt. In fact, you could trigger a soapbox moment from me right now, and I'm going to avoid it for a minute. Bring up crude while I talk for a second, though, because I want to address what you just said, guys. If you're out there in your halftime crew, you have to design a portfolio and an approach that fits not only trading but investing. Okay, and I know that it's easy to get swept up in the volatility of the market and only do delta trading, Matt. For some people, that might be fine, but not for most. Most people need to have an investing strategy. They need to have a trading strategy that has to be dynamic. They have to allocate and position size according to portfolio design and rules. This is a business, guys. It's not a hobby. You know, if you're going to do it, you have to do it well. And Harold, I did see your name, by the way. Welcome. And I'll pull out a didgeridoo and your CD and have a good time. Matt, did I ever tell you the story when I was in a ballroom and I had Harold use his didgeridoo, and he was bringing good vibes into our room in Philadelphia a couple years ago?
No, I never heard that story.
I'll have to tell you that story one time. But Harold, welcome. It's good to see you, friend. Welcome to the halftime crew. Matt, I'm with you. P ratio on Apple, if it's at 12, how could you not get excited about that? And the market's needed a correction for a long time, you know, and we're nowhere near the bottom of that if we are moving into a bear market, by the way.
We're a year away from that.
What's going on with crude? We had a draw of 7 million barrels, Matt, for the first time in 12 weeks, and it's down 3.5%.
It's really interesting, to be honest with you. For the first time in 10 weeks, we saw a draw, and not a small draw, a 7 million barrel draw, and we saw crude go down on a 7 million draw when supply has been the biggest concern. Yeah, we know what happened. No consensus coming out of OPEC. No consensus on the agreed cuts on OPEC. And OPEC is far more important than the weekly numbers on inventories that are never accurate.
Mm-hmm.
So if I'm telling you, if OPEC can't get a consensus here, Tim, if you break 50, watch out 43.
Well, and a big part of the OPEC thing is no consensus with Russia, right? I mean, if you don't get a deal done with Russia and Russia keeps putting oil out into the market and they don't also cut, supply. That's why OPEC exists. They want to have a cartel. They want to have the ability to control that production. If they don't have a consensus, Matt, it doesn't have any impact, right? You know, obviously we're down. What are we down? 3.5% here. It tested the lows. If it breaks below 50, a tradable level, in my opinion. I know we hit a low point of 49.41. But a close below 50 is significant.
A close below 50 signals to every trader who's been trying to buy at 50 as this is a support that they need to capitulate.
Capitulation on oil. If you have not yet, I can't imagine what would need to happen for somebody to still be holding on to a long side of this thing right now.
Oh, come on. How many traders
there are plenty of people
we've known in our lives saying, well, you know, that 50 is so important. And, you know, I got my insiders and, you know, we've heard this for our entire lives, Tim. Technically 50 is very, very, very strong support, psychological support. It's an important number for the oil industry. But nothing changes the fact that if you break 50 and that's the trigger, it's the same trigger I'm waiting for. I'm waiting for a trigger under 127 on the pound. I'm waiting for a trigger under $50 on oil. So it's just a matter of being patient, letting the trade come to you instead of forcing the trade on the market, and just being patient. And you know what, Tim? Here's the beautiful thing about it. If it never breaks 50, I'm not shorting. So I don't have any risk.
Yep.
And you know, if it double bottoms and double tops and then breaks out of 55 eventually, you know, maybe at that point we change our tune and we start buying again above 55. But at this point, with all the evidence on the table that we have seen with the EIA numbers today, with no deal coming out of OPEC today so far, right? So far, with no parameters on the Russian Saudi Arabia extension of their oil deal they made in December of 2017 when they agreed to cut barrels in December of 2017. We're just waiting and seeing. Everything else is noise until the markets break support or resistance. And right now, I think you got a pretty clear channel of resistance at 55 on oil. And I think you got a very, very clear channel of support at 50. And so let it hang out. Let it go up 3%, down 3%, up 2%, down 2%. Don't get whipsawed into that. Wait till it breaks, and then you make your trade.
Yeah. The only commodity of note that is up, there are a few other ones that are, smaller commodities in my estimation, but gold was up a hair this morning. It's given much of that back here, though. We still are on a green candle. You and I were having a conversation, Matt. The market just doesn't see silver as a safe haven. They see gold as a safe haven. Silver's down.
Silver as a safe haven. Silver's never been that safe haven strategy, Tim. Silver, if you look at the price of silver from 1981 until today, there's not a lot of difference in the price levels over that 30 years, T.
Mm-hmm.
It really isn't. And, silver bugs will definitely, state that there's manipulation going on, and there is, but you can't deny the price levels. Gold is the safe haven. Silver, the argument for silver is the argument of silver over gold is very, very simple. Price versus value, the GS ratio, right? Gold is very expensive. Even after the drop over the last few years, gold is still expensive in relationship to silver historically. Right now, I don't know what the current values are, but I think it's somewhere around a 70 to 75 to 1 ratio of silver versus gold. So silver is undervalued in comparison to gold. The other argument for silver is easier convertible if something crazy happens, like, the debt implosion, losing reserve status. Because of the fractional nature of silver versus gold, you'll be more easily be able to use silver to purchase goods and services versus gold. And that's in like those worst case scenarios. And then you have the technology argument for silver, that silver has more demand simply because it's used in more technology, like cell phones and iPads and, those types of things from a demand perspective. But gold has and always will be that one commodity that the world just craves as a safety. And it has been for 6,000 years. And I don't expect that to change simply because Bitcoin exists.
I'm going to add into that the relative abundance of silver just physically in the world is also a lot greater than gold. So it's just a simple supply and demand on that point that you can add as well. It's the third most abundant after, gold's the least, and then copper, and then silver.
Yeah.
All right, guys,
but it's definitely not a safe haven. Silver is. It's gold is the safety of the bunch.
I buy the physical, and I still see it as definitely something as a storage of value. We talk about it all the time. I do like buying it, and obviously, just a little different perception of gold and silver in the marketplace. Still,
all you got to do, Tim, is hold this little thing in your hand and hold the 20. I don't even have a $20 bill. Who carries cash these days? Just hold this in your hand and hold a $20 bill and ask yourself which one's more real.
Yeah, no, I agree. Guys, we're at the fourth quarter point. We're going to break down some cover calls here today. By the way, if you're out there and you're watching, I've got 75 people online, 25 up, thumbs up. So let's get that number up there. It always helps our, kind of tackle trading halftime report. We come in here, do our daily routine with you guys each day and help you. It is probably very little to ask to give us a like and a share. Hopefully you guys can agree with that and do that for us. Hashtag halftime crew.
We like shares. It makes us feel worthwhile. Listen, what shares, likes and shares are, Tim? It's
endorphins.
It's currency for YouTubers is what it is.
Correct.
Right?
Yeah.
So go ahead, go ahead and prostitute ourselves a little bit. It's okay.
Promotion and prostitution are very different things, sir. I will take you to task on that.
I would debate you on this.
No.
We are debating whether or not we're debating this. Promotion versus prostitution.
That's a podcast debate. There's no doubt about it.
Yeah.
Matt, I was thinking about it today, and I put a post in our clubhouse, and I love our clubhouse. I'm a power user. I'm a moderator. You and I, we're in there all the time. It's a great way, if you love the app, by the way, get in the clubhouse, post questions, communicate, share ideas. It's a great extender outside of the halftime report and all that kind of stuff on your phone as you're going. I put a question out there recently, Matt, about cover calls. And I asked everybody, are you trading cover calls? Do you use cover calls? What level of the cover call are you focused on? And most people said they use covered calls or would like to in some form or fashion. And let me get the numbers right now to this point. We've had in the first day about 50 people answer the poll. Most people trade them either in their margin or retirement account or both. And there's only a few people that don't trade them at all. Only 11% says I trade other strategies, don't trade them. And some people say I don't trade them yet, but I'd like to learn them. For you and I, the covered call is a very important thing. We're meeting daily on building our Tackle 25 2019, Matt. We're going to be working on that for the month of December. Talk a little bit about this, and then we're going to build 3 of them. I think we got 3 stocks picked out. But just talk a little bit about covered call.
A couple things for those of you who do not participate in the clubhouse. That is our way of communicating. It's Facebook for traders is basically what it is. So definitely make sure you're communicating over there in the clubhouse. I'll ask the halftime crew here. How many of you guys actively, and let's define actively by doing at least one live covered call every single month. Okay. So one covered call every single month in an IRA, retirement account, margin account, doesn't matter the type of account. So how many do one covered call? Just give me a lay of the land here. I don't mind that, Celine. If you're not feeling comfortable owning stock, that's fine in every capacity.
Mm-hmm. I had to get my dog off the couch and get a coffee. So I don't know what you just said right now, but I'm back.
I 30 seconds of just saying everything wrong about Tim Justice. That's what Okay. Now I will say this about the covered call. When I was a young trader, and some of you guys have heard this, but when I was a young trader, for the first 5 years of my career, I was anti-covered calls. I was a day trader. I was a swing trader. I was young. I was aggressive. And I think you could also put dumb into that as well.
Mm-hmm.
When you're a new trader and a young trader and you're just learning how to trade, the number one thing you want to do, and we all know what it is, Tim, right? You want to go pop some call options. Right? Pop the collar. You want to go pop some call options. You want to go out with put options. You want to go do swing trading and day trading and delta. You learn about all this and you get excited about the taking $1,000 trade and make $3,000 on it. Right? You love that home run potential. However, as an older veteran trader who has been around the markets a time or two, covered calls, in my estimation, are one of the number one strategies that everybody should learn, master, and apply. And I wouldn't say that towards every single technique in the market, Tim. Mm-hmm. I wouldn't say that for swing trading, to be perfectly honest with you. I don't think every trader needs to learn how to master swing trading, to be perfectly honest with you. I don't think every trader needs to learn how to directionally master day trading. Okay, or currency trading, or futures trading. I don't believe that, but I do believe that every trader should master the covered call and apply the covered call on a monthly basis. And if you've never done it, go out there and do it in a virtual account and get familiar with it. And I agree with what Jim says. It's not sexy, but it's steady. It's consistent. It is a great way to generate cash flow. For example, Tim, you take a company like GE, right? And
no, I will not. I will not take it. You couldn't give it to me.
Hold on. Before you go on your rant on GE, just hold on. Take a company like GE. What is the number one reason people have held GE for decades now?
The dividend.
The dividend, right?
Yeah, the dividend stock.
And what is the dividend payout right now on a company like GE? What are we paying on the dividend here?
Well, they dropped it, and Coach Greg
dropped their dividend like 2 months ago.
So zero. Well, no, it's 12 cents, isn't it? Or did they drop it altogether?
I think they dropped it altogether.
Yeah,
that's where that big drop is right there about 2 weeks ago.
Okay, so there's no reason to own GE any longer, but that does not displace my point here. Okay. The number one reason people have owned GE is dividend. Well, Tim, if I take GE even today, and I go rent out a 0.44 delta 30 days out, 29 days out, you're looking at the option chain right now, you can capture 36 to 37 cents on a covered call. Mm-hmm. Now you might say to me, well, Matt, 37 cents on a covered call? That's nothing. Well, that's close to over 4% monthly cash flow versus let's say the dividend was 12 cents. So you're telling me that you're paying out less than 1% every single quarter, okay, on a dividend. And that's the number one reason you have owned GE. But yet over decades and decades and decades, you would have been cash flowing 1.5 to 3% on average, renting your GE stock out, compounding those gains. The numbers that people leave on the table add up to millions upon millions of dollars to an individual investor over the lifetime of an investor, Tim.
I agree with that. I agree with that. But there's one simple technique that I don't see traders using enough when it comes to their covered call. Like I could buy the argument, I could buy the debate, I could buy all of that, Matt, but then just buy a put option contingent on the breakdown just in case. You have to learn how to call or a covered call. That's my opinion. I'm not going to take excuses on that.
I agree with you. Obviously, I agree with you. But Tim, even if you never learn how to color the trade, even if, and I want you to think about this, even if you never, ever, ever learn how to color the trade, and all you know how to do is write out a covered call once a month, and let's say you cash flow on average, worst case, 1.5% a month.
Mm-hmm.
Okay. Are you following me here?
Yep.
Okay. So worst case, if you cash flow 1.5% a month on average, okay, just let me do some math here. I'm not a mathematician. It will take you, that will be about 33 months, about 40 months to offset any loss, Tim.
Yeah, I agree.
Even if you never learn how to add the collar and protect it to the downside, the cash flow over time generated from the cover call will offset any loss to the point where your break even goes to zero. And if you never start doing that in month one, you never end up getting to a break even of zero in month 30, 40, 50, whatever it is. That Tim, I remember GoPro, and I took a lot of heat on GoPro, Tim, but in that 10 months I was doing cover calls on GoPro, I took the cost basis from $28 down to like $2.
It's a wonderful feeling when you have a cost basis of zero because you collected enough credits. Now, there are many skill sets because a covered call is not just a strategy. By the way, and this is the difference between tackle trading and the systems and what you do in the pro level and whatnot, and just like looking stuff up on the internet. You could learn what a cover call is in any book, Matt. In fact, the very first trading book I ever read was about cover calls. You buy 100 shares, you sell a call option. But doing it with design on how to build it, what to expect, the minimum that you need to get, how you roll it, how you collar it, how you deal with earnings. I know it feels complex when I start pointing out 5 or 6 things that you have to learn to do, but that's what a trading system is. And that's the trading skill set you need to effectively optimize the cover call. I love it from a very basic level, even for a very beginning basic trader who just, Matt, says, I'm going to get me a conservative stock I can afford, and I'm going to invest in it, and I'm going to sell call options to collect credits. I love that. But that next layer of skill sets, to me, is what sets apart the great cover call traders and the good cover call traders.
Yeah. Well, okay, just take Boston Science for a second, Tim.
Mm-hmm.
Okay. Boston Science in the last 3 months has basically went from $39 a share to currently $35.7. You've lost about 4 points in the last 3 months, right? About 4 points in the last 3 months. Really kind of neutral, but you've lost about 4 points in the last 3 months. So if I go out to do a cover call right now on Boston Science, and I sell that delta right there, and I capture me 96 cents in cash flow, it's lost 4 points in 3 months. How many months would it take me to offset that 4 point loss? It would take 4 months. 1 more month, you're break even without even doing anything and just clicking one button once a month.
I love cover calls.
There's not a reason not to do them. There isn't.
Correct. It fits in a portfolio design, whether it has to be in a margin account or whether you should only do them in an IRA or a retirement account. That's going to come down to the trader's personal portfolio design. There's no doubt about it. And I do love the cover call. I know we had a mastermind group last night with Noah, and we talked about it a lot. There were 3 stocks that I thought from the Tackle 25, Matt, kind of stood out to me as potential cover calls, even in this market. One of them was Alibaba. One of them was Intel. and one of them was Applied Materials. So those three different companies. Now, when you build covered calls, my recommendation is to use the journal. You should go and download the trade and learn how to run the numbers, because if you run the numbers on a stock mat and it's a 1% return, you're probably not going to do a covered call on it. But at 2.5 and a good chart and no earnings, that does qualify it as a candidate. All right. Covered calls. I love them.
I wasn't paying attention to you. I was responding to a couple of questions over there.
I saw you chatting. No. I did mention 3 stocks I think are interesting. We could either build them or we could wrap and have everybody go out and build them on their own. What do you think?
Oh, let's build one just to show them how to do it.
Go to the charts. Let's pick one. Yeah. Let's pick one. I'm going to give you 4 rapid fire style. Okay. You have Boston Science, right? That's the first one. You brought it up. Alibaba. Okay. Applied Materials. Intel.
Can I tell you exactly what I would do on all 4?
Yeah.
Okay. So Intel, now the first conversation you have to have with yourself, right up here, is when do you buy the stock? That's the first question you have to ask yourself. Okay. So typically speaking, I don't want to buy a stock that's in a bearish downtrend. Okay. And the reason I don't, if I'm planning on doing covered calls on something, if something's already in a bearish downtrend, I don't want to just learn how to protect that bearish downtrend, right? So typically speaking, in a covered call, when you're making a long-term investment decision, and that's what you're making here, Tim, in covered calls. If I buy Intel, it's because I want to buy Intel for the next 2, 3, 4, 5, 6 years, right? Mm-hmm. I'm not buying Intel from so I can swing trade a covered call. I'm planning on owning the stock long-term and using that stock to cash flow on long-term. So I don't want to buy something that's already in a bearish downtrend, although I will hold covered calls through bearish downtrends that I'm already in. I just don't want to enter into that. So you're looking at Intel right now. Intel sideways. It's a sideways trend right now. You could do covered calls in a sideways trend. However, the better trade might be to wait till it breaks 50. You buy Intel on a break of 50, and then you start doing covered calls just through technical conditions. So that's what I'm looking at on Intel. Same thing is the exact same thing that could be said on Boston Science as well, by the way. You're looking at Applied Materials. Applied Materials would have been a great, and this is why Applied Materials broke my heart, Tim, because I wanted so bad to own this and just start writing cover calls on it, but I was entering it into like a position trade that if confirmed, I would have held long-term doing cover calls on. It snapped right back down, absolutely right back down. So Applied Materials kind of, not into that great situation here. BABA, on the other hand, I am getting a little excited about BABA. I'm seeing it roll over we already talked about this. So let's say I make a decision, and again, we're talking about BABA, which has been in the crosshairs of this entire trade war discussion, but let's look at BABA nonetheless. So if I'm looking at BABA and I like BABA from a position perspective or an investment perspective because I like this company, this is a good moment to look at BABA from an investor perspective. Would you agree?
Yeah, I like this one the best, by the way. Yeah.
So it's rolling over. There's nothing out there without substantial risk right now. But when you're looking at it, BABA is the one that's rolling over the best. So you can make a decision to buy BABA today based on everything that's happening in the market, the sitting at support at 150, all of that jazz. But Tim, if you're looking to buy BABA today, I don't know if you would actually write the covered call today.
Probably not. No, you could leg into it. You could buy the shares and then wait for the call. I mean, and that's the kind of nuance for traders who do any kind of system that can improve your returns if you actually have a good eye for that.
So here's what the plan would be. Mm-hmm. Okay, buy BABA today, and we're just looking at this virtually, but buy BABA today, and here's the plan. If BABA breaks 150, you immediately write a call and buy a put to call out of the trade. Mm-hmm. If BABA appreciates up into 160 to 170, you just start writing covered calls at that point.
Correct. That's not a bad plan at all. By the way, adding the put now is a conservative approach in this market. I have no hesitation doing that. If somebody wanted to come back to me and say, Tim, I'm going to put a contingency at 145 to trigger into a put, I would be open to that as well. But having no plan for downside risk is unacceptable.
Let me answer Fortino's question here. Fortino, yes, to advanced traders, that's exactly what they would do. Okay. And Fortino, in personal gold, that's exactly what personal gold is. It's the naked put to get assigned into long-term investments to cash flow on covered calls with it, right? And there's an entire system around that. And I want everybody to write this down. It's called the boomerang trade. Okay. So everybody write that down. Boomerang. That's the personal gold system. Naked put to leapfrog into long-term investments to write covered calls against. And there is tremendous nuances in that, Tim. Tremendous nuances in that. But that's what it's called. And as for let's see, Harold and Alan, they're talking about the Poor Boys covered call. Those are diagonal and calendar spreads. And we looked at a deep dive on those last week. I don't remember, was it last Thursday?
Friday, I think.
Or was it last Friday? Yeah. So it's last Friday. So if you guys want to check out the halftime report from last Friday, we did that specifically on Poor Boys covered calls by buying longer term options, selling those same short term options. And we can certainly look at that in another one of these halftime reports we do, no doubt about that. We'll do that again. But if you want to just go review that one first, we did do a deep dive on calendar spreads and diagonal spreads last Friday. Okay. But in terms of the cover call, so that's what my plan would be in BABA, right? Now, if we're just looking to do the covered call specifically though, let's say we got to identify the rules. So rule number one is we got to buy the stock, right? You got to own the stock. And you got to own the stock in 100 share increments, which means the cost of the stock is of concern. And when the cost of the stock gets too high, that's where all that Poor Boys covered call, diagonal, calendar spreads, those types of things, right? So in terms of the covered call, though, step one is you got to buy 100 shares at a minimum. 100 shares, 150 shares, 200 shares, but you got to buy 100 shares at a minimum. Step two is you got to make a decision when you're going to write that call option. Now, when a stock is sitting at a support level and I expect the stock to go up, Tim, I'm not going to write the call option then. I'm going to wait for the stock to go up until it hits resistance, and then I'm going to write the call option, okay? If the market breaks support, you write the call option immediately and you buy put options to protect it if you need. So in terms of that, that's kind of the plan. But the rules for the covered call are very simple. You go out at least 30 days in time, okay? So you go out at least 30 days in time. And Tim, I could see a new trader saying, well, Matt, I'm not comfortable selling weeklies here, so I'm going to sell the monthlies over here, right? So you can go all the way out to the 43-day contract, come down to the 40 delta. And Tim, I can write right now a 0.42 delta option at 160 for $5.65. What that means is I'm bringing in $5.65 of cash flow coming into me, which means I'm offsetting $5.65 of negative growth on the stock as well. So that's what the covered call is. I don't want to go into too much deep because we're only an hour and 10 minutes into this, Tim, and I have meetings, but that's what the covered call is. Long-term stock position, making a decision to make, the first decision is when to buy the stock. Second decision is when to sell the call option. Third decision is when to color the trade. Yes, Charles, we can definitely sell weekly covered calls, but I don't recommend them for somebody with anything less than, say, at least 50 cover calls under their belt.
Yeah, there are other nuances. You got to be able to look up open interest liquidity, understand that. Yes, we do use weeklies, by the way, but the monthlies are usually a better play if you're a brand new trader.
Here's your retracement, Tim.
It is, sure is.
Your retracement.
Pull that pivot on the 15-minute chart. There's no doubt about it.
Yep.
We always say this, it's the close, not the open. Head to tackletrading.com real quick, Matt. I want to highlight a couple of things before we wrap for the day. Number one, thanks for being here, guys. Halftime crew. A couple of things for today. The replay from the Tackle 25 Mastermind group is on the website from last night. So under courses, Matt, and we've rearranged a few things lately, Tackle 25 and then the Mastermind group right there. Coach Noah did a great job. Go check out that replay. If you are a covered call trader or you have a desire to learn it, I would start with the Tackle 25 videos. Some of the rules are in there on that post. Matt, the journals that we've talked about, they're in the Trade Center. We've talked about that before. And then tonight we have a cash flow club. I believe Coach Gino is going to teach our pro members, some option strategies that are good for this market condition and whatnot. That's one of my favorite additions. That compound gains calculator is awesome. Yeah.
Yeah, there's a lot of stuff over there, guys. And if you're new to Tackle Train, get over there, sign up for a pro account. We'll onboard you and walk you through everything from the calendar to accessing all the materials and everything outside of that, guys. Thank you so much for being the best part of Tackle Trading. We'll see you tomorrow, Friday. Remember, portfolio journaling tomorrow. Deep dive.